Welcome back to Corporate Conversations. Then United Breweries reported their fourth quarter numbers that were higher than expectations. The profit increased by 20%. Revenues also grew 9%. We've been now joined by Vivek Gupta, who's the MD and CEO of the company. Vivek, thank you for joining in. If you could talk about how the first quarter is shaping up. That's the peak season for you, right? While there are tailwinds from Telangana, there is a surprise tax cut. There is a tax surprise in Karnataka.
Right now you all know we are in a very volatile situation. So first of all, our heart goes to everyone who is in the border towns and, for the safety of everyone. I would say we are off to a good start this year. Our last quarter, we ended up with 5% volume growth and 9% revenue growth. The summer has kicked in. We have invested ahead of time to ensure that we meet the peak capacities. You're absolutely right. The demand is actually in a tale of two cities. In certain states, the demand is really outpacing the supplies we can provide. But in other states, because of the high excise duties and recent taxation moves, we are seeing a slowdown in the demand. But we are really monitoring the situation. On Karnataka, as you met, there has been frequent excise hikes. In fact, after the last duty change, the beer category is down 12%. This is a state where 3 years in a row, the beer category was growing double-digit. We are actively meeting the authorities and sharing the data with them and continuously asking to make sure the sustainability of the beer industry and affordability remains as a part of their key plan. So yeah, it's volatile in state like Karnataka, depending on the excise duties. But having said that, overall, we still feel good about the momentum we are seeing in this summers.
Okay, feeling good about the momentum seen in summer. So, Mr. Gupta, what kind of growth are you seeing or anticipating in terms of volumes or revenues? Any numbers so far, say, for the month of April, and particularly for the premium products? Are you seeing higher growth? Is there any number that you could put to that?
Absolutely. I think, as you know, for us, premiumization is a key strategy. For the last full fiscal year, we grew 34% in our premium business, premium volumes. We continue to maintain that momentum. We have made significant investment in local production of our premium brands like Ultra Max. We've also expanded Heineken Silver and Amstel Grande in many states. So we continue to see an explosive growth on premium, and we continue to grow shares in that market to do that. As well as revenue growth is concerned, we just declared our first quarter results. As you know, the pre-season's build-up starts in March. As you see, despite the disruption in two major states, Karnataka due to the label changes in January and Telangana due to the suspension we have in January, despite that, we ended up the quarter with a 9% revenue growth. So we hope that momentum to build in, but as you mentioned, as you see today, we are in a very volatile situation due to the geopolitical environment. We just need to see how that impact the production facilities, the continuity, the movement of transportation. So that is an unknown, which is very recent, which we will have to take into account as we go for this quarter.
What about margins, Vivek? You've taken a price hike from Telangana, but you've also made some investments in new brands and bottles. So where do the margins go from here?
We continuously plan to gradually increase our margins, as we said. But having said that, our first priority is to grow the category. We want to be category makers, not category taker. We have seen that in the last 1 year, we were able to grow the category by around 6 to 7%. This used to be a 4 to 5% number before we actually went into this strategy. So I think our priority is going to be invest in category growth. You're absolutely right. We are doubling number of coolers, which we are putting in the stores. We are investing in our capacity expansion. We're investing in the organization. We are also investing in a lot of new bottles, especially in the premiumization. When we launch new brands or when we expand new segments, it needs a lot more new bottle than a recycled bottle to start with. So all of that has an impact on margin. At the same time, commodities are volatile. The tariff situation globally and some of these our local context will have an impact on the commodities. So there are a lot of plus and minuses. So, but our goal is to continuously increase top line, but also sequentially increase margins, which we have also done because in the last year itself, we have increased our margins by almost 40 basis points. So that trend will continue.
You spoke about Karnataka and how it's been impacted due to the frequent excise hikes. What about Uttar Pradesh and Maharashtra? With the new distribution there, what is the opportunity that you're targeting and seeing?
Actually doing a lot of design to win initiatives. As you know, in Alcobev, the markets have different archetypes: distributor market, wholesale market, corporation markets. We are actually reviewing our go-to-market program in each of the market and make sure that the customers get the best service. So in UP, there has been an expansion in stores, and there is also expansion in our service program for the stores. So we are seeing a strong double-digit growth in UP. In Maharashtra, we redesigned our distribution network. We are now much closer to the customer in the service, and we are seeing a growth. So we expect this program to roll out in another 5 states this year, and we expand it nationally over the next couple of years so that we can provide the best service to the retailers. And this will really help us to expand category, get beer more dominant space in the store, and also consumer will get the cold beer.
What has been the increase in the bottle returns for your existing brands, Vivek?
Absolutely. In fact, a couple of quarters back, we talked about we are putting a lot of operating discipline. Thanks to all our partners, we have seen a 300 basis point improvement in our return bottles. But as I mentioned to you, our premium business is growing more than 30%. So we are putting a lot more new bottles in the system. But overall, we have seen a 300 basis point improvement in our return bottle collection. And we think there's more opportunity so that we can get back to closer to the pre-COVID level.
So, Mr. Gupta, just to summarize this interview, as we wrap it up, a double-digit revenue growth and say a 40 to 50 basis points margin improvement likely for FY26?
That those are our goals. We would like to have double-digit revenue growth in India and volume growth. But as I mentioned to you, there are a lot of new information volatility. But we definitely want to grow ahead of category, grow shares. But more importantly, we are looking for category growth at 6 to 7% as well.
Indeed, Vivek, thanks a lot for spending time and joining us today. Wish you good luck there for FY26. The management there of United Breweries continuing to believe that the premium segment continues to do well and have had a good start to the new financial year as well. The stock off the lows of the day at the flat line. Take a short break, continue our coverage on the India and Pakistan tensions on the other side. Stay tuned.